Good morning, y'all. Give me 1 second. I'm sorry. All right. Well, hope you guys are having a good morning. Hope you had a good weekend. Had a pretty hectic week myself so far. But yeah, we are not just like a disclaimer. We are not looking to push really probably any entries for the rest of the week because of NFP. There are some observations that I want to make sure you guys are aware of, because there's a lot of clarity that can be taken away from what we currently see. So we have SMT here, right? So that could be somewhat significant potentially. These are the bonds. And if we go to the yields, let's go see what those are doing, right? We have to see what's going to occur here, whether this is going to reject. COT is one of the main things that I'm looking to point out here, because COT has something very interesting that is kind of in alignment with the indices continuing to go higher. I touch on this a lot, or I have touched on it a lot in my private community, but you see this lower portion here, how this is open interest. So you see how the open interest dropped and the COT is rallying, the lower portion's rallying. If we go to my Discord again, and we go to the COT section, which we have a vast in-depth breakdown of. Okay, you look at this relationship here when the open interest line is dropping while the COT is going higher, like the red line down here. That is a relationship we want to see if we're looking to potentially confirm a possible bullish move for the assets that we're comparing, right? When we're observing COT. That's a quick down and dirty way to observe this chart, right? Using ICT concepts. We touch on that a whole lot more in the private community. So if you want to join that, links in the description. And if you have joined, or if you watch this live or watch the replay, definitely consider liking the video, subscribing, and leaving a comment or some comments with questions. Really appreciate it. And that's why we're here, right? Is to help you guys and help me help you and other people by liking and subscribing to the YouTube channel, right? But yeah, so with that out the way, I also talked about the NASDAQ like a couple months back, when price was consolidating and we got ahead of a pretty large drop. And then I also kind of show where where a good portion of explanation is in terms of the COT based on ICT's teachings. But yeah, we do COT a lot, and then everything else, right? But yeah, so whoops. So yeah, the COT from what we were looking at is showing that price may want to continue going higher. So COT is a lagging indicator. So we don't look at that and think, oh, right now, something could be influenced. It could take a little time to price in what the COT is trying to do, right? As of right now, right, we do have some conflicting things going on. It's typical ahead of NFP. We have the yields going higher. Let me see if we have, I think we had SMT down here somewhere. Not very convincing, but there was SMT here. You could see lower low, lower low, based on this low and this low. Then we have a higher low here. But yeah, so the COT is showing bullishness, right? We see that the currencies are also supporting that. And then we also can see how the DXY is declining a little bit, right? If we stay below this volume imbalance, whoops. Just because, and just a disclaimer, just because we are not looking to push an entry doesn't mean that there won't be an entry. If things are clear, then maybe we'll engage or consider engaging. But we have to have risk management and our protocols in place for NFP, FOMC, so on and so forth. We can't just be reckless thinking that when we jump on the chart, given the conditions, that we're just going to look for an entry. We got to have discipline. The only reason that I'm still here and most of the people that I started trading with are not is because I realized this very early on. And a lot of the people that are trading, that are in my community, or traders that have been trading for a vast amount of time, it's because they figured that out. Because if you don't pay attention to risk management and you're going to be reckless and you just want to get rich tomorrow, you're not going to last. If you have unrealistic expectations like 20% a month right away, or 20% a day, or even 10% a day, you're kind of out of your mind, right? Because Warren Buffett, if you guys are familiar with Warren Buffett, think about it. He averages 17 to 22% per year, and he's legendary. All right, so just something to keep in mind when you're looking to plot out your goals and try to engage in the marketplace, right? So yeah, if this stays below this volume imbalance, it should give us push lower, and then that in turn should lead to us going higher here in the indices. What changes this bullish bias? If the fair value gap here gets collapsed through, doesn't show any support, if price breaks through and uses it as resistance, if it breaks below this daily volume imbalance I have, or daily fair value gap that I have here, that's also a signature providing clarity that we're probably going to potentially seek lower prices. And the final straw is going to be the low here and the midpoint of this order block, right? That pretty much gives us clarity that price is not going to be ready to continue to go higher at that time. But yeah, so obviously I'm bullish, right? I want to see if we can try to continue to get us up above these highs. If not, right, we have the areas in terms of adjustment labeled, which I just mentioned. We see how there was a consolidation for Sunday, dropped lower, swept out liquidity, price shifted market structure, came back down to the order block, and then rallied up above the new week opening gap as well, used it as support. So that's another line in the sand if we break through that using the 3 PD array rule, and just the logic that I continuously share on this YouTube channel, along with a lot of the tactics I also give in my private community. And just shout out to my private community. You guys are freaking amazing. I love y'all. Thank you for your support, and it's amazing to see y'all make the strides that you've been making. I've been a little busy the last couple days, so I've not been live, and I've also kind of stepped away from my private community for a couple days. But hey, we're back, right? Sometimes life happens, and that's life, right? So, but yeah, so yeah, that is kind of the gist of what we're looking for, right? It's logical for them to drop lower into this fair value gap, sweep out sell side, to then possibly continue going higher. What it does if it gets above this high is something that we can't just gauge because there's nothing to gauge off of, right? We have taken stops here. I believe there's SMT, but then there's also relative equal highs. We still have fair value gap. We have the high here. Right, we have multiple highs here, so that's pretty juicy. If you look here, but at these lows, there's also SMT there, right? And then if you look at these lows too, there's SMT as well to go higher, right? So many things: COT, seasonality, the relationships between the indices. Excuse me. And then the only thing that's kind of conflicting is the interest rate markets, at least for the time being, right? Because the interest rate markets are showing Well, they're showing bullishness based on the S&T that we have presented here, right? But we're gonna have to just see what happens because NFPs this week. But this is kind of the conflicting situation. Are we gonna go lower in the T notes, or are we gonna just retrace lower, use this S&T to then rally up and get us up into the daily fair value gap we've been eyeing that has been left, right? Which could happen if we get above this daily volume imbalance and the fair value gap here as well. That obviously is going to give us some key insights to allow us to trust that the S&T is going to hold. There is S&T here, like I mentioned, so that could potentially lead us to continue believing that this may want to go higher. But if this uses this area as resistance and we can't get up there and it starts pushing lower, then the bullishness may be short-lived for the currencies as well as the indices. But until that's proven otherwise, and our 3 PD array rule is invalidated, until that's smashed, we're going to continue to trust the higher time frame bias, which is bullishness, right? So yeah. The news just came out. We did have a little bit of a news event. So we're gonna have to observe and see what occurs here. Right. Again, we have Friday's high here. Notice how we swept out Friday's low, right, and the previous week's low, and that then led to turtle soup buys. And now price is looking like it's attempting to get above these highs. Notice how Tuesday was where the low was set. So in this case, looking at price delivery currently, what is the weekly profile that we are currently trading in? For the time being, it looks like we're continuing bullishness, and it is a bullish power 3, right? If you observe, this is the open. Look at how I respected the new week opening gap. This is the open. This is the low wick of the weekly candle. And now we're presenting the body of the candle. So wherever it's going to top out at, we don't have to know exactly where it's going to top out at or when. But at the same time, we could pretty reasonably see what price has chosen to do, especially with the S&T at the lows that I pointed out earlier. And the fact that this Tuesday had an aggressive move higher. So it's pretty convincing. We also see a YouTube model down here. Fair value gap, shift in market structure. Entry there at the low and the order block, right? And the prices just continue to go higher. So yeah, I want to see if we're going to continue going higher. I want to see us drop below this, right? Sweep out sell side here, and then possibly get price to give us some acceleration, right, to the upside. So we'll see if that comes to fruition. We got an 8-hour fair value gap here. It's pretty nice. So we have this wick. If you've spent any time with me on these live calls or in my private community, you know that the wicks, right, we measure those out, we break them down, get the quarter levels and the midpoint, and we want to observe how the midpoint is either respected or not, because that is a lot of times significant. Right, so because it's NFP, right, it's the NFP week, we definitely want to consider not looking to even consider trades before the 6:30 open, because it's heavily manipulated. And what is the price delivery before 6:30? Right, if you've been here for a while, you know that generally that's presenting the manipulation inside of the daily range, right? And then Sunday, Monday generally creates consolidation and manipulation for the weekly range, power 3, right? And we could see how that's occurred. It consolidated, dropped lower, swept out previous week's low, equal lows, and Friday's low, and then rallied. So I'm going to continue to trust and believe that if we stay above equilibrium, if we use this fair value gap as support, I'm going to trust and believe that that's going to continue to push us higher, along with the COT that I pointed out earlier, and the seasonality for July, which is generally bullish for the indices, right? Things like COT and seasonality, all that stuff, again, I mention it a lot in the private community. We go into detail. I have some videos on YouTube explaining it, but if you want more of like a one-on-one type of vibe, then that's obviously offered for those that are interested. Links in the description. And if you have just joined and you get value from the content I share, please consider liking the video. And if you're not subscribed, definitely subscribe, right? So yeah. So in a nutshell, that's pretty much all we're doing, is following to see if price is going to go higher. Okay. And like I mentioned, the 3 PD array rule down below, all right, for just to really drive it home, we have these fair value gaps, right? We have this low and this low as well. We don't want to see this low get attacked, right? We want to see price sweep down below. If our analysis is correct that price is going to go higher, we want to see things confirm that, right? Part of that would be sweeping the sell side here, and then showing some type of support, validating going higher, right? And if we just start pouring lower, and if DXY just starts smashing higher, obviously that would be a problem. Okay, so if we stay below this daily volume imbalance, that's a good sign. If we stay below the midpoint of this order block, that's a good sign for bullishness in the indices, and bearishness for the DXY. And that's again in alignment with seasonality for July, and it's also in alignment with the COT that I described earlier. So yeah. So yeah, again, same with NASDAQ, right? If we break down below this, if we break through these fair value gaps and we smash through this order block, we get below the new week opening gap. That obviously changes the sentiment, and it would likely target the rest of the daily fair value gap down here and these relative equal lows. But until that's proven, we trust our continued bullishness based on the things that I've mentioned, right? COT, seasonality, and just what price looks like. And we'll see if the bonds and yields can get in line with that. We want to see the bonds go higher using this SMT if we're going to trust or have further trust in the bullish sentiment that we've described. So yeah. So that is our position so far. Okay, it's NFP, so I want to say this once again, as always. NFP, FOMC, rate announcements, Fed speeches, holidays, the day before, the day of, the day after holidays. Those are all times that you need to be cautious and really apply your risk management to the max. And, part of the rules is 1 trade per day, preferably before any of those things occur. And if you take a loss, you stop. You don't go back in trying to make it back. I don't care how much experience you have. Okay, if you look back on the things that you do and the losses you take, a lot of times it's either going to be related to that type of issue, over trading, or trading before the 6:30 open, because you're not familiar with the manipulation and how things are manipulated, right? In terms of the price delivery before that time, right? So just something you can go back and observe in your journal, right, to see if that in fact had an impact, right? So yeah, we'll see what happens with this. Believe, is there SMT at these lows? Wasn't really any SMT. I mean, you could see a small SMT here that pushed price higher, but it's more of the fair value gap, if anything, that has pushed price higher. So what invalidates if you're trading currencies? Well, you use the same idea, but you look now, there's this wick, the midpoint of the wick, we have this order block, we have the midpoint of the order block, and then we have this swing low. So if it breaks down through those, that is the invalidation for price going higher in the currencies. If that doesn't stop and we keep pressing on higher, we have high here. We've already taken these highs. Then we also have the wick here, and then we also have the midpoint and all the quarter levels inside that wick, if that is what's going to happen and we continue going higher. So yeah. Sorry guys, give me 1 second. So yeah, let's see what happens when we get down below the low here. DXY is tanking. It's exactly what I want to see. It's in line with everything we've discussed so far. Yeah, let's see what happens. I believe it's highly likely that this is going to sweep these lows and then go, especially because we see what DXY is doing right now. DXY is tanking. All right, we'll see what happens at the end of the week, if that's going to be the overall sentiment. For now, it looks like that's for sure going to be the sentiment. Given all the things we've discussed, COT, seasonality. Again, the only red flag is if this does not, the relationship with the bonds and yields, if those don't support it, that's a red flag. But we'll see if this SMT holds. I believe it will. All right, looks like we're pretty much just wicking down. Right, hit this order block, and now we could look to want to rally. We still do have the lows here, but we'll see. We'll see what happens. Seasonality, COT, all that stuff is in alignment with this going higher. And we can also pull up seasonality for the Tina as well. Pull that up for y'all real quick. If I could find it, right? Yeah, so this right here is pretty much the bonds seasonality. July is over here. All right, we could see there's a low that forms, and then it accelerates. Okay, so that is in alignment with the commitment of traders we talked about, right? With the open interest going lower, COT going higher. If we go back to July, come back down to here, pull this up again. So lower open interest, higher COT, that's a bullish signature. Then you couple that with seasonality, there's a bullish interest there. Then you couple that with the S&T here at the lows for the bonds, that's a bullish signature. Then you go over to the DXY, and we're dropping like it's hot. And then we go to the currencies, we see that the currencies are going higher. That's in alignment with the bonds going higher as well. And then we see the indices looking like they're setting a Tuesday low of the week, bullish power 3. Higher time frame structure looks pretty bullish, right? Nothing's changed. Use this fair value gap and prices basically rallied up. And let's see, is there SMT at the lows? Possibly, right? And there's SMT at the lows, right? So yeah, all that stuff, that is the whole reason why I'm giving the sentiment that I'm going to remain bullish until the validation and invalidation points are taken out, which I mentioned at the beginning of the video, right? So yeah, again, that's basically what the sentiment is. So let's see if we will be correct yet again. All right, so yeah, if you go from this low, we took out stops. Price is now basically tried to take out stops here. But if we look from this high to this low, because this took buy side, this took sell side, we'll look and see this is equilibrium. So the discount fair value gaps or PD arrays are down below here. But because this looks so bullish, because there's so many signals sharing bullish insights, unless that's proven otherwise, I believe this is going to hold inside this fair value gap. Right? Looks like price is getting below this midnight open or 9 p.m. Pacific Standard Time open. So that's what we want to see. That's logical. Right? So we just want to see everything continue in terms of intermarket relationships. And if that continues with bearish DXY and the bullish PD arrays are going to hold price, then we have a lot that we can trust in terms of bias, right? And then it's up to you to figure out where you're going to try to enter, right? Because the focus here is always going to be clarity. It's always going to be, you being able to walk on your own eventually. And you can use this channel as a resource to help get you there, right? And or hang out with us if you like the content, right? Which is much appreciated. So yeah, what we're looking for here, we're now below the midnight open. We got below the Sunday's open, and then it rallied. Again, like I said, it presented a Tuesday low of the week so far. DXY is promoting that with the heavy bearishness that we're seeing. If that continues, then obviously we have a lot of reason to trust models pushing price higher once we sweep out the sell side here. Because people that were profitable here have their stop most likely above here. If it is going to race to get above these highs, then obviously that would be a logical area of fair value where sell side liquidity is at. So smart money can pair their orders with willing sellers to then potentially aim for Friday's high, which is a place they would likely offload their positions. If you want to get a fib projection, you can go from this low to this swing high up here. Right, you can measure that out. Okay, and you can see there's a target up there, and you can also possibly use this as well. And then, you could see possible areas. So you could like double it up and have little potential areas, extra areas where price could look to target, right? This is a logical target. This little area is a logical target, but on the way to it, right, price is basically taking out these fib projection levels. So those are all logical targets as well. You see this is a possible breaker here, but if that continues to push through, that's just further signal that the bullish signals that we've been mentioning are to be trusted until proven otherwise, right? We got this inversion fair value gap we could monitor. Right, so we have lots of levels to observe. Right now the yields are rallying. The bonds are rallying. It's promoting the idea. Right. So yeah. See, I hope everything that I've described so far makes sense. If you watch the replay, definitely leave questions in the comments. And I will do my best to answer your questions. So yeah, let's watch what price does. The news came out at 5:15. We've now breached the 5:30 open or 8:30 open Eastern, which is the bond yield or the bond market open, and the 6:30 or 9:30 Eastern time is the New York Stock Exchange open. Okay, the New York market open or session. Right, open. So that's kind of the difference between the two, right? And the 5:30 to 6:30 again is generally manipulation, and you want to be on the chart observing, coming to making a decision inside that 5:30 to 6:30 window at the latest if you trade the New York session. Right, you want to give yourself some time to prepare. You don't want to just crawl out of bed, crusty eyes, and then just hop on the chart trying to make financial decisions. Get you some coffee, right, or whatever you use, energy drink, whatever you want, and get prepared. So yeah, let's see what happens here when it gets down below that. So yeah, we got our fib projections like I mentioned. So in a nutshell, even if we could just get it to drop below this, into this fair value gap, and then just target up here, right above the midpoint of the wick, that's plenty, right? That will be plenty for us to find a setup in. But yeah, we'll see. We shall see. DXY is very much supporting the analysis this morning. So yeah, NASDAQ has already breached the low. If you flip through the highs, notice that there's no SMT here, right? If there was SMT and DXY started to rally, then things may have a argument to go the other way. Right now, I'm pretty confident that we're pretty much one-sided in terms of what we see. So we'll see if that all comes to fruition. That's what I want to see. That's what I'm going to favor and put most of my attention towards, unless something changes, right? What could change? 3 PD arrays to the downside getting broken from that, 8-hour daily time frame, right? Or one hour to the daily. If something changes within that group of time frames in terms of market structure, right? That gives us insights to possibly adjust. But unless something gets disrespected, we're going to continue to trust this. We're going to trust the SMT here, the possible Tuesday low of the week, especially with the DXY doing what it's doing, along with the currencies and overall intermarket relationships, setting aside the bonds and yields. but still considering this SMT possibly pushing price higher. This going higher off the SMT here, breaking through the volume imbalance, right, the inversion fair value gaps, that is very much a powerful signal to be able to trust the overall analysis we've come to terms with so far this morning. Right, so just keep that in mind. So yeah, we got really nice equal highs here in alignment with the fib projection that we pointed out. Right, looks like price is gonna do exactly what we want. I don't like the fact that it's left this low. I prefer it to definitely come and take some of this out first. But whether that occurs or not, right, that we'll see what happens. I think the nasdaq already took the lows, so that could be our SMT, which will then lead us to price continuing to go higher. Right? I don't like the fact that it's before the 6:30 and this is occurring. I would have preferred it to do this around the 6:30 time, right? Because we still run the risk of price manipulating and maybe punching through one more time. So yeah, that's something to keep in mind. If you look right here, obviously you can see there may be a YouTube model setting up to buy. If that is the case, we'd have to just let that occur and then wait for a continuation potential, right? Continuation variation of whatever model you use, or however you like to get into continuation ideas. We are below the midnight open, or the 9 p.m. Pacific Standard Time open. That is beautiful, and what we want to see if we're going to continue with bullishness and all of our other bullish observations are justified, right? And if y'all could let me know if you could hear me okay, I really appreciate it. Just want to make sure everything's clear. Beautiful. What's up, Maddie? Appreciate you hopping on, brother. So yeah, we got a lot of justification for bullishness. Does the perspective I've shared make sense, Maddie? Or do you have any questions? Yeah, see what I mean right here? Since we're before 6:30, a lot of people, if they don't have the mindset or experience that we touched on, they would have taken a loss here, trying to hurry up and rush, not realizing the rules, right? So the rules, in terms of waiting and understanding that from 5:30 to 6:30 is generally manipulation, that observation and experience-based analysis and rule itself saved a bad trade being taken, right? Because if you are a rookie and you're just learning about the 2022 model and you see this is clearly looks like it's the YouTube model, right? The signatures are there. Run on stops, shift in market structure above a swing high, and then the fair value gap, right? But what happened? Because it's before 6:30, they are playing games, and that's just the way it goes, right? That's just one of those things that'll save you a whole lot. And I'm heavily on the side of waiting till 6:30 generally, or 8:30 Eastern, or 9:30 Eastern. Sorry about that, because of this very thing. most of my losses that I've taken in the last 4 years entirely mainly have been from that specific mistake, trying to force a model before the 6:30 open or 9:30 open, 9:30 Eastern open, right? It's the main reason, right? The bias is, generally easy for me to find. Overall, draws on liquidity on the higher time frame are very easy to find. Could you share some insights on entering during continuations? Yeah, so glad you asked that question, because that's a very, very important thing that I share a lot of times with my private community. I think I've shared it a couple of times here as well. So a good perspective to have, or understanding to have, in terms of why does ICT say you only need one model when there's so many different models? Well, pretty much every model he teaches presents you with a continuation variation that's attached to it. So say this was the opportunity that took place. How can you look to try to enter again if you're going to really want to push the issue with following the rules of the model using, let's just use the YouTube model for example. Well, if this was to go higher and price did something like this, right? Created a low here. How can you justify the model performing if it already performed here? How can you use a variation of that in terms of continuation? Well, if price does something like this, say there's a fair value gap down here, say price runs through it or an order block, right? Say it pushes down to a fair value gap or an order block below the low, that's a run on stops if your bias is already justified and you're in line with the overall bias. Once this happens, the process begins looking for the YouTube model rules. There's a run on stops, then there'd be another shift in market structure, then you look for a fair value gap or an order block in this area. That would technically be an order block, but the rules are there. This would be a run on stops, shift in market structure, fair value gap, and then that's how you would identify, even if this was originally performed, right? If you already saw the model perform at a logical higher time frame level, right? The first move, you may miss it. That doesn't mean you just give up on the idea, because every model, like I said, has an attached continuation variation, and it'll happen generally every day. Go back into your charts for the last couple months and observe this simple perspective in terms of finding continuation variation. Sometimes it won't show up and things will just run quickly. That's okay, because this happens so often, it's ridiculous, right? But that's the thing. I always press the issue too, to not see a move happen and then start beating yourself up that you missed it. No, because if you think that way and you don't have this understanding in terms of the fact that all throughout a price leg, price creates continuation models, you will not be able to have this insight and apply it, because the negative connotation with the fact that you supposedly missed the move will push you away from being able to understand that, right? Or be able to see it, right? Because you'll have the blinders up because of the emotional impact from thinking you missed the setup. I think that I always seek EQ. So yeah, you could think of it that way as well. Look at the most recent swing low. When price is in a price leg and you're observing this, look at the most recent swing low that created the expansion from this example, right? You would go from this low to that high. Maybe it won't, if it's fast, it won't come to equilibrium, right? It just won't, right? But if it's quick and you are in line with the bias, like for example, today our bias is justified through multiple layers: COT, seasonality, overall intermarket relationships, putting aside the bonds and yields, because those are kind of going against things for the moment, which may change, right? This, again, there's SMT there, so that may support us. But when you're identifying a dealing range inside of, like a larger range, sometimes it may throw you off and you may have a hard time adjusting like this. But you want to observe the most recent fractal low and most recent fractal high inside of price legs, even if it's looking at the continuations, because then you can also use this, right? So say this was the one that you're observing to try to figure out how to enter this based on the higher time frame structure you've outlined, right? Once price delivers, how do you get in sync or navigate the price leg itself, aside from the larger one that you're trying to map things out in? Well, you use the most recent fractal low and fractal high, and you get a rolling premium and discount identification tactic, right? And then once you break above this swing high, that's now when you would observe things, right? So you get above this. This is now your near-term dealing range inside of the larger one. Does that make sense? I hope that makes sense. And then once it breaks through a swing high again, now you roll it again, right? You roll it to this swing low, to this swing high, right? Sometimes it'll break through into the equilibrium, sometimes it won't. If there is a PD array above equilibrium that it's going to use, sometimes it will not go into equilibrium, right? And that would be the time when you may miss a move, you may not, if you're trying to push the issue very aggressively with premium and discount. But this is like this is the next more advanced layer of navigating price inside of a dealing range as price pushes in a particular direction, right? How do you get in line on a lower time frame basis while not forgetting the higher time frame analysis that you've utilized? Inside of that, there's a storyline creating that larger dealing range as well, right? And this is part of how you would navigate that understanding. Do you use that as a sign of strength or weakness in a price leg? What specifically are you talking about? The identification of the dealing range? Because remember, all of this is justified from a higher time frame justification, right? In terms of the larger, this is why the higher time frame is so important, because this kind of falls flat on its face if it's not in line with the higher time frame. When there is no retracement, so that shows potential strength, especially if there's SMT at the lows, which we have right now, right? In this case, it'd be SMT at the lows, because then this is showing you that it can't even get down below equilibrium, right? So it's showing that the premium arrays or the discount arrays in the rolling dealing ranges are being heavily respected. And then again, you want to use all of this with the backdrop. Yes, it shows you're on side, exactly. And then of course you're observing as price is delivering. You're observing, right? You're observing how here. Let me find a bullish example. You're observing how down candles are being respected, right? Consecutive down candles. You're observing how fair value gaps are being respected, right? You're observing how we are continuing to smash through these and create inversion PD arrays. You're observing down wicks, right? This is another thing that I point out all the time because it's very, very helpful. And the only way that you find this very helpful is if you go in and actually study it and see how it works in a price leg that you already know is bullish, right? You have to start with knowing, right? Like looking at already delivered price delivery to observe this specific thing, like the order blocks, how they respect the fair value gaps as price is moving in a particular direction. But in terms of the wicks I just mentioned, look at how the midpoint it's respected. When we're bullish and it's going to continue being bullish, down wicks will act as discount arrays. So that's just another thing to layer in terms of validation, right? Because down wicks, the midpoints, they act as discount arrays in a bullish market, and up wicks in a bearish market act as premium arrays. So, when price is delivering bearish, you want to observe what's happening with the fair value gaps, with the order blocks, right? But you also, when price retraces, want to keep in mind the up wicks, right? Not only on the lower time frame, but you want to move up in time frames too, right? And see, what's happening in there in alignment with what you're observing on that lower time frame. Does that make sense, Maddie? All the stuff I just mentioned? Everything that we've discussed so far, just in that little string of discussion there, it is massive leaps in understanding. It's insanity, right? And I hope it's not overcomplicated, because these are those little gems that are just sitting right before your very eyes, right? And when you go back and back test versus just trying to engage, you're going to see it start really unraveling and be like becoming very clear. And the reason it's so important and why I think it's so valuable is because the whole point of this channel and my mentorship is clarity. Because once you have clarity and you understand validation and how to justify a higher time frame bias, all of these things become supercharged. And things like what we've just described here happen every day. You could find examples of what we've just discussed every single day, and you can see that it's very helpful, and it builds confidence. And again, in capital letters, clarity, right? Because clarity leads you to understanding what's going on. Understanding what's going on leads you to the possibility of being profitable when you have your model, your plans organized, and you master risk management and knowing when to trade, when not to trade. Part of that has to do with what we just discussed. All this stuff that I just told you about, take it to the higher time frame daily chart and use it there as well when you're observing bias and overall trust in a particular direction, right? It not only works on the lower time frame when we're looking for opportunities in the moment, but it also works on the daily and the higher time frames when you're trying to navigate the overall price delivery on that daily or even weekly or monthly time frame. Doesn't matter what time frame, because everything's fractal, right? So yeah, hope that was helpful, brother. Oh, whoops. So yeah, if we're gonna look to buy, okay. Well, think about what I said when this happened, right? Just imagine, right? What I've said saved somebody from taking a loss, right? Following what we've been discussing, saved someone from taking a bad trade, which I know someone probably took this trade, right? It's like undeniable because they're not fully aware of how to navigate the manipulation. And that comes from a lack of experience and a lot of times a lack of understanding how price operates in terms of time, right? Because each daily range, each session, each weekly range, there's characteristics that occur based on time, right? And those, being able to navigate that, again, capital letters, builds clarity. And that's the whole objective in terms of what I'm doing when we go live, right? Or in my mentorship, like I mentioned, right? That's the whole point. It's not, follow Christian and he's going to get you, all these trades and you're going to be rich just trying to copy. That's not true, right? It could give you a lot of, benefits, obviously, because generally we're more right than wrong. But yeah, you don't want to be ball and chain to somebody. You want to be able to have a resource like this to, assist in clarity, assist in like brainstorming particular scenarios, and help you build clarity and confidence in your own abilities, and to the point where eventually you just hang out here to hang out and share your insights and help others as well, right? But the whole point of this channel is clarity, okay? And all the things, just that little string of explanation that me and Maddie talked about right now is heavily impactful when it comes to building clarity, because you take that same explanation and you drag it to the higher time frame. You observe the 3 PD array rule that I've driven home every single live session, which is super simple, right? I hope, right? But is extremely powerful, okay? So yeah, again, this is what we're looking for in terms of what we want to see for price to prove itself to us, right? We want to see price prove itself, and then if you trade the YouTube model, which is, what we're going to focus on, this is what you'd like to see to find the continuation variation of that YouTube model. Maybe it comes down into the below equilibrium, maybe it doesn't, right? Maybe it just hits this up candle and uses this as a possible breaker, right? Very similar, right, in terms of what things look like. But a lot of times a YouTube model, say this is a breaker on like the 15-minute time frame, a lot of times a YouTube model will happen before a breaker occurs, right? So that's one of those extra insights that most won't attain unless they have back tested the crap out of everything and they understand the overall breaker, right? It's just one of those little hidden gems that most people overlook. Right? So yeah, if we're looking for something to occur, we want to see an impulse through this high. We want to see currencies continue to do what they're doing. We want to see the bonds rally. Okay. So it depends. If I'm gonna butcher your name, brother. Apadu. Sorry if I butchered your name, but where you want to start? You want to start with the 2022 YouTube model series on ICT's content. Of course, if you want like one-on-one style stuff, I do offer service like that, and the information is in the bio, or what is that, the description or whatever. But yeah, you can easily start with the 2022 model series, get a very good understanding of that. Come over here to these lives and try to view what you're learning inside the live sessions, and then just keep doing what you're doing and watching the videos. There's no perfect way to start, but obviously you want to understand that there's definitely a process to make it easier. But part of that has to do with you having a model to start with, right? Because you got to go into the market knowing like what you should, excuse me. You want to go into the market having some type of idea of what you're trying to look for in terms of like a pattern or like something, so you can get some gratification to keep you going, right? But yeah, in terms of where to start, I would recommend starting there. But also you want to start with ICT's risk management, and a lot of the things that I describe in terms of risk management. You want to have a trading plan set up, even if you don't fully understand what to do first. Like, start with your model, all the rules that are mentioned in the 2022 model. Focus on risk management, have all that laid out. How much are you going to risk? What's reasonable? And I'll give you, what I use and what I teach my students: 1 to 2 trades a day. Okay. Risk as little as you possibly can at first, especially if you don't know what's happening just yet and you're not consistent, or if your plan is also not structured fully. You don't go into the market trying to make money right away, right? You want to go in, realize that it's going to take a little bit of time, and take things step by step. Step by step would be risk management, right? 1 to 2 trades a day, right? You could start with 0.5% risk on whatever account in a demo account. You can reasonably observe that, right? And practice the risk management and trading 1 to 2 trades a day. And I'm telling you this right now, almost every student, well, for the most part, most students, aside from like a decent like handful, most students are over trading and over leveraging all the time, right? And then they wonder why they win some and lose some and are still negative. If you manage things from a risk management perspective properly from the start and build those good habits, with risk management, you'll survive a whole lot more, and it's less stressful, and you build confidence quicker, because eventually you get in tune with things. And again, you want to start with the 2022 model, but put that basic observation in terms of risk management into like a PDF. Me and my students use canva.com. It's free. You can get the paid version if you want to be a little more aesthetic, right, and make things a little bit like prettier, I guess you could say, or like more crisp. But the free version is plenty. You don't want to have it just in a list written out in words. Like, you want to have examples, right? You want to have, and you may ask, what examples? Well, examples of the rules, right? Examples of, the specific model that you're looking to engage in, which in this case should be the YouTube model because it's the easiest, right? Pull out examples even from ICT's videos, screenshot them, and put them in a private Discord server. Just make a private Discord server. You could watch my how to journal video or effective journaling video. I break down some key things that you can put into your journal. I'm not sure if I have a trading plan video here. I do have a whole series about trading plan development in my private community. I may have one here, but you could definitely watch the effective journaling video I have that breaks down how to set up your Discord server to begin journaling. But yeah, don't overwhelm yourself if you're just starting. Definitely keep showing up here because I apply everything that you learn, and I'm very systematic with how I do things. It's not random. I do the same thing every single week in terms of trying to discover bias. How I do that, the process, I show it over and over and over. So those that show up, it'll stick to you because it's just, you're going to see it over and over. It's going to be undeniable. So you can get a good feel of how that process is. How do I determine bias? That should be a section in your journal as well. And again, you go through that video, the effective journaling video, watch some of ICT's risk management videos. But to keep it simple, risk one to two trades a day, no more than 0.5% if you're just starting out, and increase it as you go. You should always target at 5 points, risk 5 to make 5 if you're trading the S&P, risk 10 or 20 to make 10 or 20 in the NASDAQ. I recommend to everybody that you start with the S&P because it moves slower, it's more forgiving. Still, it's very helpful. It's very, very amazing asset to trade. But yeah, and if you want to trade NASDAQ eventually, you can. Oh, what's up, Brian? My freaking brother, yo. I am doing well. Glad to see you here, bro. Hope you're doing well too. Brian is an amazing trader. He's becoming a freaking savage. So go follow him on all his social medias. Very, very insightful individual. And proud member of my private community. So start with risk management. Watch as many of ICT's videos as you can related to risk management. Show up here every time we go live. Push the notification bell so you don't miss when I hop on. Because at the very beginning, when I first hop on, I break down that process. I show it, right? I don't just wake up and say, oh, we're bullish, guys, right? And then just don't say anything about it. I go into detail where I start, right? Why I believe certain things are going to happen. Like what is going to stop me from having that particular objective, right? Why am I bullish? Why am I bearish? Or what changes it? And everything that I said about risk management, I apply it, right? All the screenshots that I send, all the little, videos of entries, there's always max 2 trades. On these types of weeks, sometimes I stay off, but if things are clear, I take 1 trade. If I take two losses in the week, I'm done. Because it's NFP week, FOMC week, rate announcement weeks, right? Those demand higher risk management respect. Because if you don't, you're going to find that just like I said earlier about the trading before the 5:30 time, it creates a lot of higher risk to lose. The same thing happens during those weeks that have those specific news events. So again, that's something that goes in your trading plan. And you have it written out. You don't just try to remember these things. Because most people do that. They're like, oh, I don't need a trading plan. Oh, I don't need this and that. I don't need to be reminded of my rules. When in reality, we all need to be reminded because it's very easy in this unlimited environment to do whatever the hell feels right in the moment. And that's not what gets people to be long-term consistently profitable. Being systematic, being completely organized, and understanding the importance of that and risk management is what keeps you in the game. Yeah, cutting off the opening bell trades changes the game. See, even Brian says the same thing. He's not the only one. I myself agree and preach that constantly. Majority of the students in my community know that as well. Those that have been on these live sessions as well know that that's also, it's also been mentioned. That's very important because eventually you'll be able to figure that out. Right? How to trade and navigate those types of trades before the open price. But that takes experience. Why? Because you have to navigate the manipulation. And if you don't understand how it's going to manipulate, like I said here, how price was likely to not use this and it was going to be disrespected, you would have taken a loss there. And it's before the 6:30 open. So knowing how it delivers before 6:30, fixed or disabled our ability to take a trade there because it's outside of the rules. Without those rules, like I mentioned to Apadu, I hope I'm not butchering your name, bro, but if I am, I'm so sorry. But as we were just talking about earlier, with all the rules, right? This is a beautiful visual example of why certain rules are so important. Like Brian said in the comment right now, certain rules and signatures in price. Oops, I got a freaking emoji blocking the thing. So rules and price have to align perfectly to trade that. Exactly. Right? And again, just to piggyback off that, going back to what I just said, you have to know how price is manipulated, and part of that has to do with understanding power 3 inside the daily and weekly ranges, right? And of course, having your bias, right? You can't navigate manipulation effectively if you don't have an idea on how to navigate the manipulation based on the higher time frame narrative, right? So the manipulation works inside of the higher time frame analysis, right? So if it's, how are you going to go in and try to figure out the manipulation if you don't know what, or have a good idea of, where price is going to head to, right? If you don't know where price is going, how are you going to know that this is going to manipulate to go lower and go higher? How do you know it's not going to just go higher to go lower, right? So that just brings the clarity from for the importance of the higher time frame and most of the things that we discuss in terms of narrative, right? And navigation of that manipulation period in each daily range, right? So again, if we were going to try to observe something that makes sense to us, that's in alignment with our overall bullish sentiment that we've had, which is all still intact, we have to see this occur, shift in market structure, okay? And then once it does this, right, we have to see something like this occur. Because why? Because the rules state that there has to be a shift in market structure, which we may be seeing here. Again, it's still before 6:30, but we'll see what happens. There's SMT at the lows, so we'll consider that. But the only way that we kick back in line, if we're being hardline on following the YouTube model rules, the first opportunity can be disregarded. But when price is delivering, like I said earlier, every model, for the most part, has a continuation variation. And how would you apply that logic? Because that sounds great, but how do you apply it? Well, you wait and observe until the rules kick into place, right? There's a run on stops here. Let me erase this so it's not confusing. There's a run on stops here. There'd be a shift in market structure here, and then it would return back into that, and that would be the continuation variation. It doesn't have to look as dramatic as this, right? It could just be one candle creating a swing low here, and then it pierces that back into the fair value gap after shifting market structure to then create the expansion to go higher. As long as a liquidity pool has been taken, it doesn't have to be a giant one, because remember, this is a continuation perspective here that we're discussing, assuming that the move already occurred and it's moving. We just kick back in line with the rules, right? Observe when a low is taken, that's sell side liquidity. Observe when a fractal high is taken, that's a shift in market structure. And then wait for a fair value gap to form and watch price pull back into it. And then that's your continuation for the YouTube model. And of course, you use the same logic if you're looking for breakers, right? If you're looking for optimal trade entry, that can also be used in a continuation capacity, right? Like this here, we got run on stops, right? Shift in market structure above a fractal high, aggressive. There's a fair value gap in there, right? Again, we're before the 6:30 time, so this may bite us, right? We are below the midnight open, right? The daily open price. So this is a logical level for potential buys. The only thing that is out of alignment for me is the timing, right? Because 6:30 could come in, wick down below these equal lows here, and then go, right? That's the thing. Like, that's the risk you take if you take a trade before the 6:30 open. And with some of these rules, you're gonna miss trades. But what did we just discuss here, right? In terms of continuation, you don't have to worry about it, right? Things happen all the time, over and over, multiple times a day. The key is getting to a point of clarity, so then you can start trusting the things that we discuss and the things that you learn, right? And part of that has to do with you not allowing times where you can get, discouraged by price manipulating you out of a move because you just have to take a trade, right? You're on the chart, so you should take a trade as soon as possible. That's not what you want to think, right? You do not want to think that way at all. Things have to align, like Brian said in the chat, right? Certain rules and signatures and price have to align perfectly in order for us to take a trade, right? Depending on how you feel about your experience and price at the moment, right? Sometimes you'll, eventually bend the rules a little bit, but at first you want to drill in this disciplinary perspective, right? And you don't have to break the rules at all. You can follow them to a T, and you may miss some moves, but that's okay, right? It doesn't matter, right? But again, you have to drill down exactly who you want to be as a trader. But following the rules to build habits, obviously at the beginning, is very, very important, right? So you can have a baseline, so you can build the skill set and have a graceful development experience, So yeah. We're watching what's going to happen here. Currencies are still very much promoting. We want to see what the bonds are going to do. Are we going to respect this SMT that we have, right? Are we going to continue to press lower here? Was this just a retracement to a premium? Very well could be. Notice how the midpoint of this order block is being respected. It's not closing above. That's a good sign for us to possibly continue going lower, right? That's a great sign, right? So we want to observe how that's going to react, right? And again, we have the bonds looking like they may want to go higher. We have the SMT, right? We have equal highs up here. We have equal lows down here. So this is totally logical. If we broke above and closed above the midpoint of this order block, if we got above this high, then obviously things would have changed, right? But right now, if this continues like this in this bearish trend, then we're going to continue to see possible bearish sentiment in the DXY, continued bullishness in the currencies, continued bullishness in the indices, justifying all the things that we've discussed. Not mind you, following the rules, not rushing the setup or feeling like we're going to miss something, saved us again. I guarantee you there's somebody out there that took this as the chance to get in. When I mentioned the rules were before 6:30, bang. That's two opportunities that people would have taken a loss trying to observe the YouTube model. Real time, example of why the rules are so important, and just a example of losses that are avoided through trusting the rules, not being a careless, reckless, overly ambitious trader, right? It's okay to be ambitious, right? We're all ambitious. We want to change our lives and do amazing things, but again, you don't want to be trying to go too fast when the time element is promoting you to relax, right? You don't want to drive a Lamborghini 150 miles an hour in a 30 mile an hour residential area, right? You're going to probably run into something or kill yourself. The same with this, right? This is a very slow, before we're supposed to trade type of environment based on our rules. So we have to respect that. And this here shows you why you should respect that, because you would have taken two losses, and then you would have played catch up after the actual time that we're, based on our rules, supposed to actually begin, which is 6:30. You put yourself behind the 8 ball when the rules kick in, right? The rules kick in terms of possibilities for engagement after 6:30. Because then after 6:30, we have macros. We have 6:50 to 7:10. We have 7:50 to 8:10 Pacific Standard Time. Then we have 8:50 to 9:10. And all those times are, areas where we could potentially see an opportunity inside of a macro time window, right? So that narrows down the timing, right? And that's a whole nother discussion, right? That we're not going to get into today. But yeah, let's see what happens here. Okay, we're heading into 6:30. Let's see what happens. We've taken out stops here. Mind you, they punished anyone trying to take this opportunity here, swept out liquidity, right? Again, we have SMT at the lows between the indices, right? SMT. We got relative equal lows down here, which I don't like, obviously. And then in the Dow, we also have SMT and price continuing to go higher, right? So because the S&P has the failure to get below the low here, it's probably going to be the strength leader because of the SMT. When we're looking for bullish SMT, the SMT that's presenting the higher low versus the one that makes the lower low, which would be the NASDAQ here, the one with the higher low generally is the strength holder that will have the more one-sided delivery, while the one that presented us with the weakness, because it created the lower low in the bullish SMT, would generally lead us to a smaller move or a lackluster delivery in comparison to, the one that made the higher low if we're in a bullish scenario. Right? So that's what we are going to continue to observe. We're going to continue to trust the fact that, this created Tuesday high of the week and sold off. We see that the S&P has created the low of the week on this Tuesday and now rallied up. So now, in line with our higher time frame bias, we're going to continue to watch and see if the fair value gap I pointed out at the beginning is going to hold and give us this run higher based on the S&T at the lows here. Potential S&T here. I wouldn't be surprised if they do punch lower one more time. I prefer them to do that in all reality, because one of the rules that I have too that has also saved me is to not buy when there's equal lows, right? Because there's liquidity there, right? Sometimes you'll miss the move, right? Sometimes it'll go off that SMT and miss the move. And, that's just part of the game. But that's, again, one of those things, buying equal lows or when there's equal lows present, or selling when there's equal highs present. Those are times when I've also incurred losses at a higher rate versus, those types of scenarios not being present, right? Like the NASDAQ, for example, right? It may look to use this S&T and get above this high here. If it gets above this high here, maybe I consider this order block and this scenario as a possible buy, right? Maybe that's what I decide to do, right? But again, my rule state, after Tuesday on NFP weeks, I do not take a trade, right? No matter how clean it looks. And yes, you miss setups. Yes, I miss setups doing that, right? But the question is, are you going to be disciplined and follow your rules, or are you going to be reckless, careless, and not follow your rules and pay the price for it, right? And the price isn't only near term, it'll be long term paid as well. It'll be extending how far your goals are in the future, right? So that's a conversation you have to have with yourself, right? Which I've had that conversation with myself multiple times the last 4 years, right? So yeah, let's see what transpires here. So now we got this order block here. All right, let's see how this acts. So yeah, we still got DXY tanking. Let's see how this order block responds. All right, we have the NASDAQ here, like I said, swept out the lows already. Let's see if it gives us one more punch lower. It is kind of concerning to see how quick the DXY has performed, because that could lead us to the AM session giving some issues trying to be one-sided. That's always something that is a possibility because of the pre-market quickness with the DXY. But yeah, we'll see. because London's been really bearish, right? So if we're going to be bullish for the AM session, it's reasonable to see this SMT scenario present us with higher delivery. Again, we are bullish. We have not changed, flip-flopped. We have, total justification with the fact that this is going to go higher. Consecutive down candles are here. Let's see how that responds. That's an order block, right? 5-minute order block. Let's see how that is respected or not. Okay. Right, so run on stops, shift in market structure. So here's a possibility for a YouTube model to present itself. For a buy, we have equal highs here, relative equal highs up above here. Well, not really relative equal highs, but we have this previous this is a London's high, right? So London's low has been taken, daily fair value gap has been tapped into. London's high is here. So I assume, given all the bullish stuff we've discussed today and the conviction we have behind that bullish sentiment, that we should see London's high get targeted, for the AM session. Right? We have order block here. Okay, we have fair value gap here. Let's see, we got an inversion fair value gap here. See how that responds. Let's go to the S&P, see what's happening. See, the S&P's already taken off. Now the question is, did it offer a move for you to engage in based on the YouTube model rules, based on timing, right? It did not. So is that something you get upset about, right? Is that, oh, I can't trade, I don't know what I'm doing? No, right? It's you're being a disciplined trader. You're trying to be here 10, 20 years from now, right? You're not trying to blow your account out, right? We have this fair value gap. That's the only fair value gap that's left. I don't really like this fair value gap because now we're at a premium, and it very much, has the opportunity to go higher. We are bullish, right? And obviously it's delivering, right? I don't like buying in a premium, so I personally would miss this idea. Unless price digs lower, kicks through this low, hits this and rallies up, creating another shift in market structure, then that goes back to what we were talking about earlier in terms of the continuation variation, if all things continue to be in alignment with that. Because now this is a low here, that's sell side liquidity, right? So if it was to sweep through that, then that's a wonderful run on stops. And then if we can get a fractal high to be taken out, creating a shift in market structure bullish, then we can kick back in line with our observations of the continuation variation of our model that we focus on. All right, so yeah, we have this inversion for value gap that may be respected. We'll see. So what is our regular trading hours gap looking like? Okay, so the regular trading hours gap was created, then quickly filled, right, from this to there. So now we're above the regular trading hours gap. Again, that's just another example of us verifying the bullishness. We have completely repriced through that regular trading hours gap very quickly. You see the inversion fair value gap I pointed out? That's also being respected. We have this order block here. We want to observe how that's going to be respected. Right? All the other indices are rallying. GBP, Euro USD are rallying. Yields are retracing. Bonds are retracing higher. SMT at the lows. Bullish for the bonds. DXY is tanking off the face of the earth. All these things justify our bullish bias. COT is in alignment with bullish indices. Seasonality is in alignment with bullish indices. So just imagine, just think about it. All these things are layered on top. What does that create? High probability in terms of analysis for bullishness. Now, you take into consideration that it's NFP week, right? So it may make that more difficult in terms of delivery. Narrative-wise, we are jam-packed in alignment with the overall actual narrative in price delivery right now, which is bullishness, right? So we shall see how all that transpires, and whether that's going to be something that takes place. We have these. Okay. So we took out this high here, right? And now price. What does it look like on the lower time frame? So yeah, we came all the way back. So this may result in an immediate rebalance, right? It did come back into fair value gap. That may be retracing into our discount, right? That may be giving us our discount retracement, right? That's a pretty vicious wick lower, but everything's still in alignment, so this is probably still going to go up, right? So that could be your YouTube model entry to get us up above these highs here, right? So yeah, if we measure out from this swing low to that swing high, notice how it came down to a discount. Anywhere in that area would have been a decent idea given the intermarket relationships. The only thing that kind of goes against what we're observing here is the yields, and whether the DXY, because it's been so quick, whether the DXY is going to retrace. If that does happen, then we could potentially reach down below the lows and basically take out the lows there, which then may just sweep up those that liquidity pool and then possibly go higher. That's justified because we still have this fair value gap down here, right? This higher time frame fair value gap. So if things turn around on us, for one, we're trading right at the 630, right? So you expect that things may be shaky, right? So it's a best practice to wait at least, till the first macro, the 650 macro, to then make a decision. And again, that rule may make you miss trades, but it also will save you the heartache from taking losses that were unnecessary because the timing was wrong, right? So you have to weigh out the trade-off, right? Are you so aggressively in need of taking a trade right now and you can't miss a setup because the world's going to end? Then you're going to pay the price for it in many ways. Or are you going to be the disciplined trader that has a set list of rules that you follow to a T no matter what happens because of, specific reasons, like the manipulation, right? And again, you may miss a setup, right? That does not say that this idea is an invalid setup, right? It could very well bounce higher, right? But there's a higher risk of this retracing because of the equal lows, because of the fact that the DXY has been so quickly pressing lower that it runs the risk of a retracement. That retracement could be just enough on the DXY to retrace this all the way lower, right? But say you did enter this. Say you did say, okay, I'm going to bend the rules, Christian. I'm confident, and I'm just going to enter because that's my model. It is the YouTube model, right? Like I mentioned earlier, right? Well, what would your risk be, right? What would your validation invalidation be, right? Maybe you aimed for this. Maybe this was your setup, and you're going against the let's allow 630 to push through to the first macro rule, right? Say you go against that. If you entered here at the YouTube model characteristics, right? You'd have to calculate now. Swing low, that's one PD array. This fair value gap is another PD array. These consecutive down candles, the order block, that's another PD array. But if you wanted to get even further insights and not use that one because maybe it's too far for you to think invalid and you want to find something sooner, we have an inversion fair value gap right here that you could drag across as well. So if price was to smash through that, those are reasonable invalidation levels. And then you also have this order block as well, right? So that would be your invalidation, right? So as you're managing the trade, you'd keep that in mind, right? But then you'd also, again, keep in mind that the fact that DXY has been so bearish, we are at risk of this retracing to then continue to go lower, which may upset the timing for this opportunity. Right? Again, that's not to say that the rules aren't there, right? But the current condition that we see, the delivery and price, has a risk of price turning around, and then maybe seeking sell side potentially. So again, if you're following the rules, like I mentioned, 650 is the next macro. That's generally when I like to take trades. Once the first macros hit, once the first 20 minutes of the open price has been priced in, because the manipulation happens a lot of times from 5:30 to 6:30 Pacific Standard Time, and then it kind of lags out a little bit, leaning and bleeding into the times right before the first macro. Because what are macros? Right, macros are times when price is programmed to deliver, right, in a particular direction towards a particular liquidity pool. So yeah, that's why those are very important. If you want to make it so you enter with the best chance of price moving versus being held in consolidation or a bunch of nonsense, then you should trade, like I tell my students, only when macros are present. And that also forces you to not take a bunch of trades. There's only like 3 or 4 macros per session, that being the AM and PM session, and in the London session as well. Right? So that forces you to take the rules seriously as well, because that's just a fact that things happen around those times, right? So another thing I want you to pay attention to here is also, aside from the validation points that I pointed out here, we also see that there is the wicks, right? The down wicks. Remember I said those are discount arrays? We also have the open price here. So that's a beautiful opportunity, right? That's a beautiful potential area to enter a setup, right? It's a beautiful area. Like if it was not F1 or NFP week, even right now, right? Like this is a beautiful list of rules that are in place, aside from the fact that the DXY has been so aggressive that we run the risk of it retracing. And then of course the bonds and yields, right? They're kind of justifying what I'm saying here in terms of bullishness. Now it's kind of kicking back in line with this retracement going higher in the bonds, retracement going lower in the yields, respecting this midpoint. That's all correlating with what we want to see here in terms of bullishness for the indices. So yeah, we have this inversion for value gap I pointed out as well. So if we're pushing price and wanting to trust it to go higher, we want to see this respected as support, because it presents us with more clarity as far as whether we are in fact heavily bullish in this particular scenario. We have these down wicks. Each midpoint acts as a discount array, so you want to label that out, pay attention to that, see how that's going to respect during right here at this open price. If we are bullish at or below the open price on the daily is where the best buys will come from, right? So in reality, that we're at a beautiful area if we are going to continue going higher. It's a beautiful area, right? So we want to see that respected. We want to stay above the midnight open from here. We want to see these lows stay intact, and we want to see this fair value gap hold, right? All of that stuff is what will justify in the moment whether price is going to continue going higher, alongside how the bonds and yields are going to respond, because it seems like this is going higher and this is going lower based on what we've discussed from that higher time frame, right? Respecting the midpoint here, it's been bearish, right? It's respecting the lows here with SMT. We have equal highs up here. We have a fair value gap. We've dug lower into a discount, right? So again, all these things justify this being a beautiful setup, right? So yeah. Again, the only red flags for this idea as it was printing was we want to see this for surely going higher, or at least reasonably for sure going higher, as well as seeing the DXY continue, and then the timing, right? The timing moving into the macro. If this happened at 650 or near 650, there'd be a whole lot more confidence, right? Like little to no justification for not getting in the setup, right? So yeah. So let's continue to monitor how this is going to react here. Again, we're at a beautiful area, midnight open, shift in market structure, aggressive shift, right? DXY is tanking. We also see that this consecutive down candle, that's an order block, so the midpoint of that's also pretty relative, or relevant, I mean. So let's see how this responds. All the wicks are being respected. It's beautifully, right? So let's see if that continues. If that continues, again, our target is up here. Beautiful, beautiful area of potential buy side delivery. So do you guys have any questions? I hope everything has made sense today. Because again, pretty much everything that we've discussed is vitally important. Like so vitally important. And with the goal of building clarity, right? So yeah, we're approaching the 650 macro. So we'll see whether that promotes us going higher, or if we're just going to hang around, given the fact that we are still in pre-NFP conditions. So that could very easily allow this to just not do much and then save the buy side sentiment liquidity for NFP damage, right? We could see how the DXY is definitely promoting us to go higher. So we'll see if that continues too. It has definitely done amazing to the downside so far. But it's had a lackluster response from this fair value gap. That doesn't mean it's not going to do nothing. It doesn't mean, it won't deliver. But again, when price hangs around like this, that's presenting you with high resistance, which is justified because it's NFP week. So it's a little bit harder to find this type of continuous move because of that fact, right? Let's pull this up real quick. Yeah, the Dow's playing, looking pretty disgusting, right? So yeah. Again, London was very quick, right? We run the risk now because DXY has met the lows. We run the risk of the indices slowing down its delivery, because by now we should have been raging with the DXY. So it's getting a little, it's showing high risk given the fact that the DXY is moving quickly, but now the indices have stalled out a little bit. Again, this is what I want to see. I want to see us get above this high. So yeah, everything that we've discussed today has beautifully been in alignment. I hope that those of you that have been here from the start of the day have got value. If you have got value, or if you got value before, and you haven't liked the video, I really appreciate it if you go ahead and do that. And if you haven't subscribed, definitely subscribe, because I'm trying to see y'all here, so I could see all of you guys learn and get your questions answered and clarity achieved, right? So, and I appreciate all you guys that are on right now. I appreciate all you guys that do hop on a consistent basis. And if there's anything that you'd like me to discuss, or if you have any questions, feel free to leave anything in the comments. It doesn't have to be a question. It could be an opinion, right? It doesn't matter. Anything that you feel you need help with, though, is definitely, I definitely want you guys to feel comfortable voicing that, because nobody's opinion really matters if it's not productive, besides your own. So if it's not helpful, if it's negative, right, just disregard it, right? You could leave negative comments too, right? If there's something you want me to improve on, I am very much open to any type of critiques that you guys have, right? So yeah, you see this is beautifully delivering so far. Already hit 20 points, so if that's your model, there you go. So yeah, and with this delivering, right, my target is up here, right? I'd like to hit this, and then that'd be plenty. That'd be plenty. I mean, again, even this is plenty here. So yeah, out of all the lives that we've done, just to acknowledge something real quick, out of all the lives that we've done, there has been one live session where things were a little bit too rough for us to get quickly in line with things and find an opportunity that was profitable. This is yet another one that has been profitable out of all, out of all the lives that we've done so far. So with that being said, those of you that are showing up consistently, I hope you're starting to see that this is truly attainable. And sometimes it's going to, be shaky, but for the most part, when you know what the hell is going on, you can be consistent, right? And it's up to you to be profitable. Part of that has to do with clarity. All right, so now we're approaching the exit. See if we can get that full target. What's the DXY doing? So currencies are rallying. Okay, DXY is breaking down still. See what happens. So yeah, we got above this first high, so that's also a pretty decent target there as well. Like weeks like this are definitely times to take the most logical target right before your main target, right? Because it could just stop. It could just, be waiting, right? So just some considerations to have in terms of knowing the conditions and how to adjust your mindset. Because if you demand your full target every time and you don't have any reservations about, different conditions and how you should operate, and sometimes you'll let price come all the way back against you, right, and lose when you could have made 20 points, right? So let's see what happens here. So we've got this order block here. See if that is something to be respected. So if we see price turn all the way around and go against this idea, today has been a beautiful example, right, of the higher risk environment when it's ahead of NFP, okay, or FOMC, or rate announcements, or Fed speeches, so on and so forth, right? So yeah, let's see how the midpoint is respected here, or not. Sorry if y'all hear my dog, he's over here freaking out. He's like, who's at the door? Do you guys have dogs? Shit, if you have a dog, let me know what kind of dog you have in the chat. Curious. I feel like it should be a requirement that all traders have a dog, by the way, just for disclaimer. Right? Dogs are amazing. Okay, dogs are amazing. Who lets the... Jose, you're a freaking savage. I love it. And we are just about to the target. And come on. See, DXY has me confident that we're going to get above the high over there. Oh, whoops. What just happened? Where is my tool? Okay. See, so you could see how price basically tapped right above that. Right? It smacked right above it. Right? So, beautiful area to exit. Okay. So yeah. So that was a beautiful idea, right? Beautiful entry to risk ratio. What? A little bit over 1. What is that? 1 to 1. A little bit. It's like 2 to 1, right? 15. Risk 15 to make 30. It's pretty nice. And just for reference, okay. Entry there, exit right at the high here. Right as we press through. Right? So yeah. We really do this. Okay? I practice what I preach. I don't share anything that I don't do. I don't sell a dream. It is a hard industry to thrive in, but that's the thing. Battle scars, when they're shared from someone that proves what they do is accurate, it's very important to soak up as much of the actual fundamental things that are taught versus trying to just look at the material side of the possibilities in this industry. A lot of people get stuck with that, not realizing that there are people that actually know what's happening and can actually be helpful to you. But if you're focused on very non-important things like how people's image looks and how many followers they have or any of this other nonsense, you unfortunately miss the gems that are hidden and scattered all across the internet. ICT was one of those people, right? For the longest time, he was one of those people. And now there's many of his students that now have the ability to be that person as well, right? And all of you guys will eventually be that person as well for others, right? Whether that's your families, whether you start your own YouTube channels, whether you wherever you take this, if you stick around and you follow the rules and you do what you're supposed to do, and you look at this in the proper way, you'll be pretty amazed, right? Target fully met. See, so that's beautiful. See, so there's a lot of people that, they hop on, they hear that, we're not taking a trade, and they get off. Little do they know, you just wait and get the insights. Things pop off the chart, and then we beautifully get a chance to engage, right? Again, I didn't mention that, take this trade or do anything, because the rules, right? Rules are what they are. And putting students in a more risky scenario when they don't know how to navigate while they're trying to learn is irresponsible for these mentors to do, right? And I refuse to be one of those people, right? But I did mention how beautiful that was, whether you decided to engage or not. It's always going to be your responsibility, no matter what. No matter what I say, it's always your responsibility. And this is not financial advice, right? So yeah. So I hope that all makes sense in terms of the idea we just walked through from start to finish. I hope that everything that we've discussed today has made crystal clear sense. I hope you guys have gotten value from the video. If you have gotten value from the video and all my other content, like I've said, please like the video and maybe share it with some of your friends, and subscribe if you haven't already, right? It's much appreciated. And I appreciate all of you guys that have been here from the start of today and from the start of when I started going live, right? Those of you that have been here from the start, and those of you obviously that are in my mentorship, I hope that I have been a blessing to you guys just as much as you guys have been a blessing to me. So I greatly appreciate all of you guys. And there's many, 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 many more amazing times to come. And quitting can't be an option. Okay? So, please recommend. So let me go read some of the comments. Just got a dog 3 weeks ago. Funny you say that. All traders should have one. Yeah, I feel like it should be like a requirement. If you're going to be a trader, you should get a dog, because right, who else is going to bring you that comfort, right, without stress, right? Some dogs are high maintenance, but regardless, that unconditional love they give you is very helpful when you're going through hard times, And yeah, it's just one of those things, right? It's a cheat code, right? Like, you can't be profitable unless you have a dog, right? Right, it's definitely something to consider if y'all like animals. Definitely get a dog. But yeah, do you guys have any questions about this execution we discussed? Or just, even if you didn't take an execution, do you have any questions about the target? And remember what I've been saying this whole time. Notice how I said the target to take profit, if the idea was the opportunity you engaged in, was this high. What is this high? London's high. Okay? If you guys have spent some time here, London's high and London's low are two of my favorite liquidity pools, some of the most consistent ideas that I've ever taken, even to this very day, including today, has to do with having the higher time frame idea, coupling that with what the lower time frame looks like in terms of navigating the London's high, London's low inside of the daily power 3. Excuse me. Right? So prices pierce that. We have been completely on point. We pointed out rules and how they would have saved us from taking 2 initial losses, which are over here. Right? There was 2 opportunities. There was this one, and then there was this. I think it was this one, where price, you would have taken a loss. And our rules state that before the 6:30 time or 9:30 open, we don't take a trade. Now it's been proven that you don't need to worry about missing a setup. We also talked about continuations, the continuation idea in terms of having one model and how it offers a main model for entry to set up the initial move. And then if you miss that move, you just wait for the rules to kick back in place. Okay, and then you see how that can be very helpful, even in this specific example here, right? Although I used a little different logic in terms of trying to enter. I waited for it to deliver the possible YouTube model, which this was. Go from high to low. You see it came to a discount for value gap, shifted market structure, ran stops inside of the higher time frame SMT, inside of the retracement into the daily fair value gap or 8-hour fair value gap, gave us that response from that. You see how this aggressive move occurred? It occurred in the context of the bullishness from the fair value gap here, the 8-hour fair value gap. Why is that 8-hour fair value gap or daily fair value gap trusted? Because of the COT analysis we did, because of the seasonality analysis we did, because of the interest rate analysis we coupled with it, right? All these things bring you what I call capital letter clarity, okay? And you can see, hopefully, how straight to the point that is. Process of doing those analysis concepts, obviously, could take a little bit of practice, but that's, every time I hop on live, this is what I'm doing. I'm sharing the whole process with you, right? And what I just mentioned, you should take note of it if you're creating a trading plan and write that stuff down, right? Which elements were there? Because I just mentioned all the elements to creating a bias, right? Overall higher time frame bias. I think I have a video about that as well. I think I have one or two about bias. But yeah, right? So yeah, now we're in the silver bullet time window. Okay. Let's go see, what did the S&P do? S&P created a seek and destroy profile, so that's pretty not something I want to see, right? That's not something I'm comfortable with seeing if I'm trying to frame out high probability. So yeah, this response here makes me uninterested in trying to engage anything, and makes me want to just observe what's going to occur. I believe that was like a news event or something that did that. Yeah, 7 o'clock had the news event, ISM services, PMI. It's a pretty significant news event. And then at 11 o'clock, we have FOMC meetings. So yeah, today had two areas of red flags for more difficult perspectives, harder to trade environment. You can see how the navigation that I've shared with you guys today, very simply, with one trade that was taken, which we timed perfectly. That's not random, right? Nothing that we've done today is random. The fact that I avoided two trades that would have resulted in a loss, but then found the one that I fully trusted and engaged in, that's not random. That's very systematic process, right? Because and if I didn't have it as a systematic process, you'd have seen 3 entries live in front of you where losses were taken, and maybe not even be able to have held the other trade that I shared, right? You'd have seen recklessness, right? You would have seen a lack of clarity, when today we've had full clarity, even with news events like this, right? That doesn't remove the fact that, yes, it's a higher risk environment, right? But that also shows that there is a method to the madness, even when things or conditions are a little bit more difficult, right? It just goes back to how important having a very structured process that's clear and repeatable, how important that is, right? Having rules, showing how discipline is so important, right? And today, I hope, showcased that fact. I remember what I said earlier. I want to see the bonds go higher, and I want to see the yields go lower. Yields are going lower. Bonds are going higher. Indices are going higher. DXY went lower. Currencies are going higher. See how everything's in alignment and everything is crystal clear in terms of why things are occurring and how we could have trusted things, right? If you're taking notes, I'm telling you, if it doesn't click just yet, watch this video, watch all the live sessions and how I've done the same thing over and over and over, and just continue to show up. And I'm telling you, it'll start to click. This is not rocket science. It is difficult because there's a couple moving parts, but I'm telling you, right? I'm telling you, it works. And I personally show it constantly that it works. I have students that constantly are popping out the woodworks daily saying, dude, this is insane how clear this is. Like, it's insane how systematic this is, how repeatable it is, how trustworthy it is, how certain rules are helping me not blow my account, how confident I'm becoming because of that, how less scared I am to execute, and how much more consistent I am with calling bias, right? And I do all of this live and in my private community to try to transfer clarity. But it doesn't work unless you work, right? So yeah. So yeah, everything is falling in line with what we have discussed today. Those of you that have stuck on for the entire time have gotten the value, hopefully, that I've aimed to showcase to you. Those that are impatient probably missed it, and that's unfortunate, right? But yeah, so let me know in the comments, for those of you that are here, what has been the most eye-opening today in terms of what we've shared, what has happened in price, right? What has been the one or two things that has been the most eye-opening? Let me know in the chat. Or is everything just, the way it always is, right? The hell? Just document real quick. So Maddie said the thing that has been the most eye-opening is my cold ability to analyze in seconds. Yeah, so just on that topic, it is kind of daunting at first, it seems like it'll take forever to learn how to do this quickly, to get on the chart, do it fast, and then have enough time, enough reasonable time to get in line with things. But that's the thing. That's where process comes into play, right? That's having the repeatable process, having things organized, and practicing that process over years. I kind of share things in a way that kind of fast tracks things, because I've made a lot of mistakes in the last 4.5 years. But things just start to stick to you, right? And there's certain things, at least for me, everybody's different, right? But I've discovered specific ways, like specific categories, or like a list of things that you have to have an answer to in order to make a decision that you can trust, at least for me, right? Of course, it's all been derived from the things I've learned from ICT's mentorship and, just him in general, and in my own personal experience. The bias situation is a little bit more difficult for most people, but again, that even that has a way to simplify it, right? Not, taking away from things that ICT teaches, but it's actually applying the things that are important in the bias and knowing which things you can disregard in a particular moment, how to validate and invalidate things, right? And that's the thing, like getting on here, showcasing the whole process over and over and over every single day, starting from point A, getting all the way to, entries. Where the hell did it go? Right, getting all the way to this process, to the entry. That's pretty much, the whole point in these calls. And again, learning how to do it quickly is going to come from, for one, having the process outlined, knowing where to start and then where you should end up, validating and invalidating things, right? Intra-market relationships, fundamental analysis, COT, how to do that process quickly, because there's, that's another thing that can go quickly. Understanding seasonality, how to observe that quickly. The thing about seasonality, though, as a side note, trusting seasonality takes time. Trusting COT, because it's a lagging indicator, takes time. But that all coincides with how you determine bias based on the validation invalidation process as well, from that higher time frame, right? And then doing all that quickly, it's a fact, or it's something that just demands the process to be laid out, organized, and then you just do it over time. And then doing, like, hopping on something like this call, and all the live streams that I do, it's putting all that stuff into practice so you can see where things start and where you should end up, right? And how to just apply it. And then over time, hopefully that's pushing the process into you so it's familiar, so that when it comes time for you to do it on your own, you're like, oh, I've watched this dude do it 100 times. And because I focus so much on process and not, hey guys, look at me taking an entry and look how much money I made and look at my Lamborghini, because I'm not that type of person, it forces the trader to focus on the process. And some people that'll turn off, and those same people that get turned off by that will not be profitable in the first place. So it doesn't matter, right? If they want to be entertained, they can go do something else, go watch a TV show, right? But we're here on these calls, going through these processes here and in my mentorship to gain clarity so we can do this full time, right? This isn't a video game, right? This isn't something to take lightly. This is something to educate yourself on and take serious, like you guys, right? You guys take this serious, right? People that have invested in me, investing in them, in my mentorship, they take this serious, right? And because I'm not flamboyant with things, I feel like I generally attract the people that I want to work with, right? Because, the main thing when people come or invest in a mentor, it should be to get results. And the mentor should be able to prove results. Or even if you spend time watching somebody on YouTube, unless you're literally going to be entertained, which some traders do. But if you're going to actually learn, they should be able to prove it to you. They should be able to prove the process. Not just, hey guys, look at how much money I make, because that doesn't matter. Just because I can make this amount or so and so can make this amount doesn't mean you're going to be able to do it unless you understand the process, unless the person is there giving you an understanding, an actual systematic approach that you can apply and see results from. Unless that's the case, the results that people seek when they go and try to shadow these people that are supposedly making money, which most of them are not, the results just won't come. If all they're focused on is where do I get in, where do I get out, there's much more to it. Or, oh, I'm going to watch this educator because he's made 10, 20 grand on live. Like, none of that matters. Oh, this person has a Lamborghini, so I want his lifestyle, so I'm going to just watch what he's doing, and all he shows is entries. That's not going to help nobody. That's why I don't show that stuff. First of all, I don't want to attract people like that. Because if people are coming here because they want to, oh, let me see how much money you make, that doesn't help you. And I'm not interested in trying to build some image based on being flashy. I'm not that type of person. I could care less, right? Because they can't spend my money, right? And that doesn't do anything for. I don't need validation from people, right? The whole reason I started being on the internet, showing this versus being in private like I used to be, is to help people, right? To inspire people. Seeing what's happening in this crazy world we live in right now, all this crap that's going wrong and chaos and crazy polarization of nonsense and the destruction of, in many cases, of things, and the chaos is causing, that is stirring up people's lives, right? So people need a tool to help them get through it, and have something that they can rely on. And trading could be one of those things, because in my opinion, the last thing to go, if everything falls apart, is going to be the markets, right? And, not that things are, going to blow up. I mean, things are in chaos, so who knows? But the last thing to go will be trading. Jobs will go first. Other things, certain things will go first. But trading, if you have access to the markets and this remains, what it is across the world, then it's going to stay here. So being able to apply this and have this skill set is massive. So, that's the whole purpose and why I got on and started making a YouTube channel and having a mentorship. I have a mentorship, like a paywall mentorship, because a lot of people wasted my time before. And I love this stuff, and I'm not here to waste my time, right? I'm not here to waste my time on people that are not the right people to work with me, right? Because what I have works, and where I got it from has been validated. And, it needs to be taken serious. And the fact that you guys are here, right, on this call for the past, 2 hours, like, clearly you take this serious, right? And I appreciate you opening your ear to me and trusting what I'm showing you, and I expect people to first hop on and be skeptical. You don't just go and take people's word for it just because they show an entry, right? Or a Lamborghini or anything. They need to prove it to you. And it takes time to prove to people. And those people that are impatient, that don't want to prove it to their students, are scumbags. And they should get the hell off the internet, because they're what's wrong with this industry, right? And I refuse to be part of that equation. So the whole purpose is to build clarity for people. Not only build clarity for people, but I want to build it for the right people, and I want to attract the right people. And that doesn't come from me being flashy and all these things, right? So, it's very important to me that the right people are with me. And, some people are just looking for entry tactics, and, I just want to look at this flashy, entertain me, right? I'm not here to entertain nobody. I'm here to try to get, to the best of my ability, transfer this logic and knowledge and consistency in some form or fashion to people that truly love this industry, because I truly love this industry, and you will too, right? If you don't have a full love for it and it seems difficult and it's hard for you, eventually you'll love this industry too, and sometimes you have to get to know somebody. Most cases you have to get to know somebody before you love them, right? Well, it's the same situation for trading. You have to really get to know the markets to develop that passion, to really love the markets and truly spend time staring at a freaking screen for hours, right? And enjoy it, right? It takes time. And having a process that's repeatable, that you can trust, helps develop that passion, And then once it's there, once you see it, once you're able to observe that this is in fact consistent, that you can in fact do it on your own and really make this something achievable for you and your family, you'll never give it up. No matter what loss you take. And the best way to defend from you getting discouraged from losses is to apply risk management that I share consistently, that ICT shares consistently. 1 to 2 trades a day, right? If you take 3 straight trading days, you stop trading for the week, rest, figure out what the hell you did wrong bias-wise. Don't risk more than 0.5% at first, or maybe even less if you're trying to figure out the process. Never overtrade ever, because that'll destroy months of progress. It takes months to make progress as a new trader, but it takes one bad day to ruin all of that progress, and then it's going to extend your process even further, and it's just heartbreaking, so it's avoidable. Just like today, how we avoided 2 bad trades because of the rules to not take trades before 6:30 because it's could be manipulated. That saved 2 losses from being taken, right? And it's the same with risk management, right? It'll save you from the heartache, right? It'll save you from destroying your confidence when it takes a long time to build the confidence, but it takes one day to destroy that confidence and increase the time it takes for you to get confident again. And one bad day could ruin a couple weeks, sometimes a month, right? So it's like the risk to breaking those rules and being reckless is too high, both financially and mentally, right? This doesn't have to be a war zone in your mind. It could be a peaceful, stress relieving experience, right? Right? It could be a very peaceful and rewarding experience. It doesn't have to be heartache and heartbreak constantly and doubtful feelings all the time. That's what you want to avoid. And part of the rules and discipline that I try to shove down your throat, like to get everybody to really just eat up, right? And like really take it and apply it, the rules are so important. Because if you don't have the rules, I'm telling you, if you don't have risk management and you don't focus on these boring things, they're not boring to me and most of my students, but to most people they're boring, right? But if you don't marry those boring things and become a master at those, it becomes much harder than it has to be, And people don't like these types of conversations, right? Again, it's always going back to I need a freaking entry, and how much money you make, and this and that. But none of that's helpful, right? Like, it's not helpful. It may be helpful in the moment to follow somebody and shadow them and take every trade they take because they're profitable. But at the same time, what if something happens? What if the person doesn't go live? Like, I was busy for the last, couple days, right? What if they can't show up, right? What if something, God forbid, happens to them and they're no longer around, right? Then what? You put all your eggs in that basket when you could have learned and done it yourself. And then that skill set can be transferred to your family. So it becomes not only a financial asset to you, but it also becomes an asset to your loved ones, your kids, your grandkids, whoever, your friends, So think bigger. You got to think bigger. Don't think just about what can happen right now. Think about what you can do over time and what that's going to also be able to do for your family, right? Don't just think myopically. Set big goals, but in the meantime, accept the smaller goals. Just like when you're targeting, like I always discuss, target 20, 30 points, but be okay if you feel uncomfortable after 5 or 10, and take it off and watch price continue to move. Be comfortable with that, because that's still moving you forward. That's still moving the needle forward. You know what I mean? And that's how you build confidence early on too. Have large targets, but take the smaller target. Take it and accept it, because it's still moving the needle forward. Who do you have to impress? Right? There's just nobody that's opinion should matter. No one's opinion should matter, because they can't spend your money. They're not going to be there and have to deal with the mental disaster that will come if you break your rules. Like, they're not going to be there. They don't understand any of these people that criticize, right? Or say that that's not enough, or this and that, or, and don't compare yourself either These people that supposedly make millions and millions of dollars trading, or tens of thousands of dollars every second, supposedly, right? Like don't compare yourself to that stuff, because it's fake. And if they are making money like that, it's not from trading. I'll tell you that. Maybe a small portion could not be, right? For the most part, these people are liars and will not come out and do even what I do, and just show bias. Most people won't even just get on and show where the market's going to go, let alone take entries live, right? Like Mamba FX, like this fool is totally ridiculous. Right? People like him are totally ridiculous, but people gravitate to him because he's flashy and all this nonsense, when in reality most of his money has not come from day trading, and it's been proven. There's people that have joined his services, taken all of his trades, and physically seen him change the entries and targets and say he wins, supposedly, while his students are stuck in trades and they don't know what the hell's going on. They don't know where price is going, where he got out, but supposedly he won a trade that he called out, but then 10 minutes before it was a different entry and target. And it's that type of game that's played, and people don't notice it for some reason. Yet they still gravitate because it's flashy and addictive to see the lifestyle, right? That lifestyle is attainable. It really is, But at the same time, you got to be very careful. You got to be very careful, because this is a hard industry in itself. There's a lot of things that are placed in this industry, has the highest suicide rate out of every single industry, because of these high lofty goals and unrealistic expectations and poor leadership in terms of mentors and educators. So much so that people commit suicide because they are sold this big dream and it doesn't deliver, and then they beat themselves up because they put their heart and soul and goals and dreams and aspirations into this succeeding. And then when they don't succeed, it's like a sledgehammer to their ego, sledgehammer to what they thought they could become, when all the stuff they were following was just the wrong way to do things, because liars are here victimizing the people that are down and out, just looking for a way out, and it's unfortunate. But that's why I don't sell this flashy look at me, that's why I don't do that, because I refuse to have any part in that. Right? And the results themselves can give people an idea of, what the lifestyle could be. If you win consistently on a weekly basis and you're smacking trades down left and right, I mean, life's good, right? You don't have to show how good, So if you make money, that results in a better lifestyle, right? If you're consistent in trading, there's no limit, So let people use their imagination, right? So yeah. But yeah, see, I want to do something. So the three of you guys that are here, I am probably going to hop off in a couple minutes, but I want to make sure that I get something from you guys, if that's okay. So I want you guys to drop 3 subjects or specific things into the chat, so I can know what specific things that I should make like a game plan around to start knocking off, or maybe explaining deeper, or giving you a process for, right? Those of you that are here actually too, I'm not sure if my mentorship students, if one of you guys are my mentorship students or not, but the 3 of you guys that are here, I do want to give you guys something for sticking around so long. If you haven't seen this already, it's one of the categories of things that you need to have an answer to, right? Okay, for sure. Well, you kind of are a student, right? You're one of my YouTube students / supporters. So, but yeah, let me send you guys this in the chat window so you could screenshot it and kind of get an idea of what you will eventually have answers to, and or need to have answers to have a really solidified process. Let me see where it's at. So this is the type of thing that's under my trading plan development process that I give to my students. Just some subjects, right? Some different subjects that you must have an answer to eventually. Okay, so you're going to want to screenshot these particular things. Shoot, oops. If I can get it to... Sorry, it's too big to post in the thing because it's a couple. Sorry, stick around for a couple minutes, guys. I want to post this so you have it. Kind of just some considerations to think about, right? Some things to keep in mind in terms of particular subjects, pretty much in a list of importance, right? Order of importance. Keep in mind that these subjects that are like categories of things, they should all have a section in your trading plan, in your private journal if you have a journal. Whoops. Well, I have for journaling in terms of journaling for like ideas, like noting and tracking profits and losses and stuff like that. I have a custom journal that I give my students, just like as a perk, I guess, for being in the community. But other than that, in terms of day-to-day analysis journaling or just framing out your process type stuff, we just use Discord. Just make a private Discord channel, just a basic one. You can go in on my YouTube channel also when we get off here and go watch my trading plan or effective journaling video. I have basically a breakdown of what you should include, but I've also, like I said, all these little sections here, these little subjects, you want to keep in mind when you're creating your trading plan or, the different sections in your trading journal using Discord. Discord's my favorite, right? I mean, you could use Telegram or a physical journal. I like Discord because you can separate things. You can pull examples and screenshot and copy and paste and continuously add to it. And you can keep yourself very organized. It's very, very helpful because there's so many things, there's so many topics. Like, and when you watch a video, you want to have a place to put it, like with the subject. Like if I talk about something in a video, or if, you know, you're watching ICT's videos and, you know, you're trying to master a topic and put all the information possible under that topic so you don't forget, you got to have a place to put these things, these resources, versus just having it in your mind. Discord gives you the opportunity to do that. You know, it gives you an opportunity to be very organized. It gives you the opportunity to have a place to store your thoughts. It gives you a place to go in and really analyze yourself, analyze your day-to-day activity. You can have sections for, you know, many, many different things. I do recommend that you have a section for each of these things, right? Each of these little topics, okay? Because it's very important, right? And every problem that you have, like I tell my students, every single problem that you have will fall under one of these categories in terms of identifying the issue, right? So that's why this is important, this little list. And you want to have an answer to every single one of these specific topics, you know, because then you're able to narrow down where your real issues are. You're also able to solidify your strengths and weaknesses, right? And you know, it just makes it easier to track your progress also. But again, the main thing is being able to identify your issues and how you can improve, right? Maybe you understand bias and all these different things, but you're still, for some reason, getting in and getting out too early. Well, it has to do with mindset and expectations, you know, and the confidence you have. Maybe it has to do with bias too, right? So you got to figure out what kind of process you can create to assist your mindset, right? How do you develop the trust? That also goes to validation, invalidation, right? It helps you kind of navigate the analysis of yourself and your performance. But again, you want to have an answer to each of these topics, because if you have an answer to each of these topics, you're pretty much able to navigate for the most part. It just takes a little bit of experience, and that's kind of what I let you borrow when I'm going live and doing these types of things. It involves most of these situations. Pretty much every single topic that has been described in here, all those topics were applied today. Mindset and expectations, I set those early on, right? Today is what it is. The week is what it is. We set our expectations mindset-wise. Times and macros. I told you guys, wait till this specific time, right? We got to wait because of manipulation, this and that. Risk management, right? The risk management was, you know, what I say, one trade per day, right? I did kind of go against that, but I was confident because of all these overlaying things in terms of price navigation, right? Higher time frame to lower time frame, and key fundamental analysis, intermarket relationships, and SMT. All of that upper first description that I just posted in the chat, all of that stuff was in effect, which I just laid out right now for you to see, right? Then the model. What models were we using? We broke down the models, when it was going to fail and when it would have possibly taken place and actually delivered, which it did to a particular target, right? Targeting's down there too, and why that target was important. It's London's high, right? And so far we've talked about, you know, some of the trading plan ideas. I mentioned the video to go look at the effective journaling. I think I have a trading plan video. And then POI identification, validation, invalidation. We talked about that on the higher time frame and why we trusted bullishness and weren't bearish at all. Then we also talked about trade management, right? We watched the management of the trade. We talked about what was going to validate in the move, right, on the lower time frame. Also, what would disrespect the whole idea from that higher time frame. So everything that I just mentioned had an answer to it today, and it was applied today within minutes, right? It seems like a long list of things, but that's the thing. I've been doing this for, you know, a decent amount of years already, and I've been doing the same thing over and over and over and over and over and over and over. And I think it's also helped me personally, because I've been able to share this and help other people. So it kind of amplified my belief in the idea, because other people I see it's benefiting as well. And then it's just, you know, me explaining things over and over and over. And if you don't have anybody to teach, just sit and explain it to yourself. Do what I do. Record yourself. Instead of journaling, like typing things out and screenshots, do that too. But in the midst of doing that, record your screen. Download Zoom, push screen record, right? Use your headphones for the mic and just talk to yourself. Tell yourself, right? Like what you're thinking. Because then when you go back and review using this list of things I just shared with you guys, using that list, hearing yourself talk and knowing what you're thinking, like going back and observing what you were thinking, you'll start to be able to navigate adjustments very, very easily, and it just becomes super effective. And yeah, this takes time. This is a very involving activity at first, but I'm telling you, right? Like, I hope that me getting on here, coming to the determinations that I come up with, like the consistency in calling bias, consistency in the discipline, consistency in the executions and profit taking, and all the process being as consistent as I show. The students from if you look at my Instagram, all the students with all the testimonials, like there's hundreds of them at this point. I hope all these things together assist you in seeing that there's a way to do this, and it's being shared. So I hope that you realize that all your efforts that you are demanded to put into this are justified, that there is light at the end of the tunnel. There is a specific goal you're trying to reach that is absolutely attainable. So anytime you sit at the chart and feel like it's boring or anything like that, just remember what you started trading for, why trading made you interested, and then just think like you're on your way. It just takes time. It's not a matter of if you're going to make it happen. It's a matter of when. The when is based on you, right? And how much work you put in, how good you are at being disciplined, how much you follow the rules. Because the more you break the rules, the more you overtrade, the more you over leverage, the more you have to play catch up. And the more you have to play catch up, the longer things are going to be. So you might as well take that into consideration and think, hey, I'm not going to shoot myself in the foot anymore. I'm going to follow the rules that this guy keeps trying to yell at me. Well, I'm not yelling, but you get the point, right? It's continuously being told, right? So just tell yourself that you're going to focus on the discipline portion. You're going to focus on the process of how to observe bias, which I do every day. So come here every time I go live, set notifications so you don't miss when I'm on. Because when I jump on, right within the first 30, 40 minutes, I'm doing the process. I'm breaking down bias. I'm figuring out what direction things are going to go, why, what's going to validate, invalidate, what I can trust versus what I shouldn't trust, what are fundamentals doing, what's the news doing, what's this doing, what's that doing. Like all that stuff's done before the open. I'm not scrambling to do it right when the open price is coming, and I'm like hurrying up trying to rush to make a decision. Like you got to give yourself time. That's why I show up at an hour before the opening bell. Right? So yeah, right? So take that list that I gave you guys in the chat. If you have a question on any of those topics, please let me know. Okay? And then each live session, right? Or probably this Friday when we go live again, because there's NFP, I'm really not taking a trade. Today I bent the rules a little bit because, look at what happened. Look how beautiful and in line we were the entire morning. I mean, it was clear, right? I had clarity, massive clarity this morning, even with the little shakeout, right? We got in, took what we were going to take, and then got out, right? But it was clear, right? Everything's proven to be correct, right? Obviously, the price delivery shows more difficult, which is why I took profit where I took profit at, which is why I told you guys to be nimble on these types of weeks. But now when NFP comes, I've already made money, so I don't have to worry about it. I'm not going to engage. Why would I do that? Right? Why would I push for no reason? Right? So I'll use that time on Friday to answer any of the questions you guys have. So yeah, based on the list here, or even just based on anything that you guys have an issue with, let me know in the chat right now so I can note that. I am going to get off in about 10 minutes. So before you guys leave, definitely throw some type of topic you'd like to have broken down in the comments or in the chat, so that I could write that down for Friday's lesson, right? Because we'll go live on Friday and do a deep dive on some stuff. Because again, the whole point of me going live is not to entertain you, okay? The whole reason I have a mentorship is not to entertain these amazing people, right? Although I love you guys are amazing and I appreciate the support. I'm not here to entertain you, right? I'm here to get you rocking and rolling so you can be a freaking savage and not have to worry about the world and all the crap that's going on, and, you know, give you a life skill that most people can't attain, you know? So yeah, let me know in the chat, topic or two, right? Whatever you feel you'd like me to talk about a little bit more in depth, and I will be happy to go live on Friday and knock out those questions or concerns one by one. Right? For my private group, we will be live tomorrow, right, in the private community. So be ready for that. I'm going to put that in the Discord too, so you guys don't forget. And yeah. And Saturday too, those of you that are in my private community, we're going to go live too. So, per usual. So yeah, let's kind of go back to what I said earlier too, while you guys are punching in those questions. So yeah, look right here. Remember what I said over here? We got to wait, right? Let's see a run on stop, shift in market structure. Let's see if we can get a continuation, right? How I described that. Well, when price dug lower here, what happened? Ran stops, respected the midpoint of this, so we're still bullish. Everything is still trustworthy to be bullish. That's our bias. We haven't deviated. So what happened? Run on stops, right? Shift in market structure here. Fair value gap. YouTube model continuation variation to the upside. See? So missing this move or missing these two moves didn't have any bearing on anything. You don't think, oh, I missed a move. Oh my God, I'm not going to be able to trade. I suck and blah, blah, blah. That's totally irrelevant. Stay focused. Realize that if your bias is correct, which we have trusted all this morning was bullish, we had multiple layers of trust to believe in the bullish move. Because that's the case and nothing was disrespected or nothing changed, just keep thinking about the rules, right? Run on stops, shift in market structure, right? Price delivered. Right? So yeah, beautiful, beautiful, beautiful. Let's go look at the NASDAQ. Oh wait, we're looking at the NASDAQ. Let's go look at the S&P, right? Didn't really do much. If you do look at the NASDAQ versus the S&P had the lower low, right? It also had the seek and destroy, and it's had the most ugly delivery out of the two. Right? NASDAQ was stronger. Remember what I said? When one asset makes the lower low in a bullish environment, in a bullish S&T, right? The lower low one will deliver a lot slower than the one with the higher low. And that is another visual example of S&T. Beautiful delivery. Seeking London's high. Very sloppy, but guess what? We knew timing wise, 650. You see that? All the way up, smacked our target. Right? And what did I say? I practice what I preach. Price came right above that. My main target was London's high because it's NFP, and I'm not a greedy, demanding person, and I'm okay with taking $200-300 freaking dollars. I don't need 1,000 a day. Okay, $200-300 is plenty. 5-10 points is plenty. Okay, because that's the case. I mean, in the NASDAQ, it's like, you even more, right? So because that's the case, and I'm not here to demand anything, I'm here to make money. Because that's the case, I was able to take profit there. Boom. Right? It was like 20, 26, 28 points. I forgot exactly how much. Right, somewhere around there. Right? Entry was right here at the upper portion of this inversion fair value gap we pointed out. And as price delivered, we took profits there, although it punched higher and broke through the high. Does SMT at any time and place carry the same weight, or is SMT within a macro? So that's a good question, brother. It's a very good question. So SMT can be used in many cases as a timing tool on the lower time frame, but it's good to see it in a macro, that's for sure. But it's also, if you're looking at it from the higher time frame, or even even the lower time frame too, sometimes it can act as a validation tool as well for a particular level to hold. So you know how ICT has this turtle soup logic, right? Say, the turtle soup logic, and then, maybe there's another asset that goes like this. Say it's just like this, right? Say the PD array here in this case is the weekly high or something. If you get something like this occurring, when price runs above and there's SMT between correlated assets, that kind of shares with you, if you have, like the DXY going higher or something, that shares with you insights that level is probably going to hold if you see an SMT at that time on the higher time frame. Then when you go into the lower time frame, if this is happening inside of the kill zone, the AM session, or inside a macro within the AM session, obviously that's going to justify this level holding, not only from the higher time frame SMT that's forming, but addressing your question at any time and place. If it is inside of a macro on the lower time frame, while something like this is occurring on, say, like a 1 hour or even on like a 15-minute, that lower time frame SMT within that context shares insights that this level is going to hold. So that helps assist you in knowing when a run-on stops will be a reversal, right? That's also another tool. So it can act as a timing tool in the moment on the lower time frame. Then it can also act on the higher time frame as a tool to help you trust whether it's going to hold at a level or not, right? But inside of a macro, it's important to see SMT to also assist in proper timing as well. Because, if this happens, generally that's going to lead to price accelerating away from that particular level that the SMT formed at, right? What are the times that are programmed in the marketplace algorithmically to deliver price to a particular level, right? The macros, right? Or AM and PM session, right? So, yeah. It's not just any random time, right? Like if you see random SMT at any random level at a random time, generally that's how you get bit and things turn around and become a problem and you take a loss. But when you layer things down with SMT at particular higher time frame PD arrays, and then you see that reaction happening, and then you drop down to, say this is the 1 hour, and then you see that happening inside of a PD array, higher time frame PD array, inside of a kill zone. So let's use the AM session for example, and then there's a SMT within that particular framework, then obviously that's going to help you with timing if you can position yourself inside of a macro with that stuff behind you. That has the wind to your back when that type of thing occurs. That's layering thing. And then you layer that with overall higher time frame narrative that we talk about with the process that I try to lay out in terms of bias and validation, invalidation. Right? So just to simply answer your question, SMT within a macro is way more valuable. You can't, in SMT at a random place, you don't want to worry about SMT randomly. You preferably want to see SMT occur at a PD array on the higher time frame at a particular time, basically inside of a kill zone. And then if you're trying to execute on the lower time frame, you want to have that stuff occur as well as SMT forming inside of a macro. That's a good valuable thing. It's more valuable than when you see it randomly scattered across the chart, because that's how you get bit. There's SMT forming all the time, everywhere, constantly, right? But the ones that are important, how you use a filter to narrow that out is, yes, inside of a kill zone, inside of a macro, but you also want to consider where it's happening on the higher time frame, right? If it's happening on the lower time frame, but that's inside of a higher time frame PD array where that also may have an SMT, that's even more high probability, especially if the higher time frame is promoting that there could be a reversal. Maybe all this happened after Tuesday and Wednesday was bullish, and then now we're going into Thursday, right? Say this would be a Thursday running into this high, right? Creating the SMT between the indices. Then that could generally lead you to possible retracement, right? Does that make sense? I hope that made sense. Hope I didn't confuse you. But yeah, you want to find SMT at particular PD arrays inside of liquidity, and then lower time frame. You can use it as a further timing tool inside of a macro. Higher time frame reigns supreme. Yeah, it'll always reign supreme, brother. But macro on the lower time frame can be an entry. Yes, exactly. Yes, exactly. The lower time frame can definitely fall in line with the higher time frame, right? It can act as a confluence, but you want to make sure that you're using the higher time frame always, like you said, higher time frame reigns supreme. Yeah, no worries, brother. No worries. Thank you, right? Because man, you're one of the students that stick with me the whole time, so that's amazing. And I hope you get value from all this time, because I truly do not take you lending me your ear for granted. I truly don't. So yeah, anything you need help with, just let me know. I hope that the SMT conversation we just had and all the things we've talked about this morning has made sense to you. Again, we will go live on Friday, and we will break down. Let's do some breakdown about SMT maybe. Maybe we'll do some stuff about SMT and observe that throughout the session. Maybe that'll be helpful, right? And then maybe I'll talk about trading plan development, maybe some other process-oriented things based on some of these topics in the lists I gave you, right? If you see news at 10 a.m. Eastern, the SMT did, or the ES did the SMT. Beautiful. Yeah, I think I pointed that out earlier. Yeah, it was down at the lows, right? If you zoom out, you see that there was SMT here, right? Going into the open. We pointed that out too early on in the session. Not only that, I believe there's SMT here at these lows too, right there. So there's a larger frame view SMT, and there's also a lower, more near-term frame of reference using SMT as well. All kind of justifying and kind of becoming a confluence to what we've talked about this morning in terms of the bullish run higher, right? I appreciate you saying that, brother. And you're going to be a legend in the making too. Shout out Brian. Okay, if y'all don't follow my boy Brian, he's one of my private community students. Amazing content that he shares. And he is becoming a freaking savage, and it's amazing to see. So definitely, if you want to watch or just observe some markups and stuff that are really insightful, he also has some things that he does when he's studying that's also pretty helpful. He has some resources for that as well that he shares. So again, yes, Breaker Brian is a freaking savage. Okay, he has been growing tremendously, and it's been amazing to watch. So it's amazing. Yeah, man, the analysis game. There has been so many things that I've had to go through to get to this point. So I appreciate you saying that, brother. And hopefully a lot of the things that I explain here, some of the insights and wisdom I share, hopefully avoids you guys from dealing with some of the heartbreak I've had to deal with, because it has been a very bumpy ride. Finally smoothed out, in the last 2 years. But yeah, it was a very bumpy road. But I mean, that's part of it, right? You got to take some of the hits to become resilient and realize that you need to respect the risk, that you need to be organized, and all these key things that we discuss on these calls, right? But yeah, guys, I am going to call it a morning. Not sure where the thing went. So yeah, let's just pull this up real fast so you guys see. All right, so I hope you guys got value. There's a ton of things that we talked about today. So many things. So if you want like a deep lesson, pretty much a masterclass in bias and trusting your analysis and SMT and all different topics, process and navigating low probability conditions, different rules and all kinds of different stuff, definitely worth a watch. It's the same thing with all the live streams, so definitely worth the rewatch, right? Or even if you just jump through it just to see different topics that are touched on. Doesn't matter where you start, there's generally a lot of value. Of course, starting from the beginning to the end obviously gives you the full picture of things, because we go through a whole process of bias identification, validation, invalidation, contingency plans, risk management, mindset. It's just a ton of things every time we get on these calls, because there's a lot of things you guys got to master, and I try to showcase how you can go about doing that. So but yeah, again, for those of you that have any questions, leave them in the chat. Maddie, appreciate you. Jose, appreciate you. I hope to see you guys this Friday. Brian, freaking proud of you, bro. I forgot this. I still don't know how to say your name. Apadu, right? Thank you also for joining. Thank you, all of you guys, for sharing your time with me. I really appreciate it, and I hope you got value. And again, if you have any questions, leave them in the chat or the comments at this point. And happy 4th of July to you guys as well that are in the States or that celebrate our amazing independence here in the United States. But yeah, let me know in the chat or in the comments if you guys have any questions, if you have any things that you want me to break down in the future. Otherwise, I will see you guys on Friday, right? So God bless, and hope you guys have a good rest of your day.